Yeah, man, go ahead. Let's talk about it.
So I've been playing mainly lately that 10 EMA strategy off of mainly Nike, which I've been wildly successful playing Nike. I don't get it. Tesla and Nvidia. Yeah, it's crazy. Nike's been, I mean, I'm like 85% on Nike right now. It's crazy, man. But so I was looking, and I'll share the screen here with you. So I was looking, oh, it says disabled participant screen sharing.
Yeah, I'm getting it on right now.
So I'm analytical, man.
Try that. Is that good?
All right, let's see. Yeah, perfect. Okay. So this is my trading journal. All right. So this is for the month of, that's overall, this is for the month of October. Okay. So I'm up around, 1 R for me is $300 because that's 1% of my account right now.
Yeah.
And so I'm up $2,300, which for the second month of ever trading, that's great. But I know
it's pretty good.
Well, it's better than a loss, I reckon. I don't know if it's good or bad. I just know I'm not losing right now, so I'm pleased.
Okay, well, let's just look at the figures here. Okay, so it says average win-loss ratio 0.95, average win rate 62%, profit loss ratio 1.57. Okay, dude. So with a 1.57 profit loss ratio, your average win rate is 62%. Like, yeah, dude, that's really good. So there's an inverse relationship between win loss and win rate, win rate and your RR. So typically, like you'll hear people say, well, oh, dude, to be a successful trader, like you only need a 50% win rate. Like that's true if your average win is more than 1 R. So to have an average win greater than 1 R and a win rate greater than 50% into the 60s, that's profitable. That's profitability, dude. Like that's really good.
Well, that makes me feel like I'm on the right track. But
I do actually see here. I'm sorry to interrupt you, but I do see here. I think I misread this. I think I misinterpreted for this. So your win-loss ratio is actually 0.95.
Yes. Which
is not like ideal, but your percent profitable, like your win rate is 62%. So like we just talked about, is if your win rate's 90% and your average win, I mean, like it compensates for that. Does that make sense?
It does, yeah.
So that's why, I mean, so yeah, either way, however way you shake it down, you're profitable. I think something that we should definitely work on is this piece right here. Because why not get this to at least 1-to-1 with a 62% win rate? That would be great. But I mean, I think we could do even better than that.
Well, and so that's kind of what, so I was doing really well this week up until Friday. All right. And this is my Friday right here. I shit myself on Friday. It's basically what happened, and so I've been going back through some charts and really looking at some charts. I think I can fine tune things, but something that I started doing was, you can see like this trade here with Zoom, this trade here with Peloton. The reason I made those trades, I started looking at trying to play gaps, like bullish or retest gaps, and playing like the retest on the gap. Peloton I hit to the penny, but I don't know if I just need to stick to the 10 EMA. I was going to ask you, what has your experience been with retest gaps, and then is there a way, like you pointed out, to you look at the average trade per profit, the average winning trade, what can you do to increase those? I mean, I don't want to get greedy, but I want to try to, where am I lacking? What can be done to make it more profitable? and this bullish retest gap strategy, is that something that's just hit or miss, or is that, kind of what's been your experience there?
So right away, you're new to trading, dude. I mean,
Yes.
so right away, like the success you're having is amazing. So, but there are so many things that we can still refine, because even the way that you're talking about these gaps, there's some fundamental things that I think we can talk about regarding support, resistance, and volume that's going to make you not even think about it in this way. You're not even going to think about the name of the gap. You're just going to play the chart as you see it once we talk about these things, once we go through a couple examples. Because, dude, I myself have been here where I'm like, it's a bullish retest gap. That goddamn thing should dip, and then I should be able to get in, and it should go. And that's just how it should work.
Right.
The thing is, though, dude, I mean, when you go in, and I speak from experience, I was going in there with the preconceived notion of what should happen, like expecting, like, for sure this is going to happen. It's not whether or not it's going to happen, it's where I can get in.
Mm-hmm.
So I was basically not looking at the chart as it was coming in. I wasn't looking at the candles and analyzing each candle as they came in, because I was like, this is gonna happen. It's just a matter of where can I get in. So instead, I think I found it helpful for myself to abandon the mindset of this is a bullish retest gap, so this is what's gonna happen. Just get rid of it. We need to start focusing on playing the chart, playing the candles, playing the volume as it comes in, and with no expectation. In fact, because that's what makes us supple, is if every other trader has an expectation of this is what's supposed to happen, and we're playing the chart and we see things, because, dude, you get tunnel vision. Like, if you expect that this is going to happen, I mean, in my own experience, I force trades. I look for things that aren't even there. I try to make things appear that objectively, like, once I look at them after, when my adrenaline settles and my greed settles, and I just look at the chart like a day later, I'm like, that was such a bad trade. It was so obvious not to take that. Like, why did I do that? And, dude, it's just because you have a preconceived notion going in of what's going to happen, and you get tunnel vision, and you don't read the chart as it's coming in.
And so I want to show you this one right here, because that's exactly it turned out to be the worst. Just the absolute worst trade. It was just god awful. And let's see, where was it? No. And it was off a gap. And so I think I'll be able to learn a lot from this, but I didn't know, all right, what do I need? What am I looking at? Like, where did I go wrong? Why was this not a good gap as opposed, or why was this not, dang, where'd it go? Oh, here it is. All right,
okay, bro, right away,
right there?
with your journaling and your organization of stuff to make it easier on yourself and easier to find, we can make some improvements to this too.
Okay, good.
Because, dude, yeah, this is a lot to do for a little. But let's look at the thing first. No, actually, while we're on the topic, let me just show you what I would recommend doing. So if you go back to your go pull up like a TradingView chart.
What do you want? You just the chart? Just
pull up any old chart, doesn't matter.
Okay. Can you see that right there?
Not yet.
Here, let me do this. All right.
Perfect. Okay. So go up. Oh, no, wait. No, I want you to go into the TradingView desktop.
Oh, go into TradingView. Okay. I got you.
Sorry about the confusion.
No worries. All right. Pull it up. All right, here, can you see that right there?
Sure can. Can you make it just one? Can you get the grid to go with? And then at the same time, go ahead and open up that trading log. Did you have the back trading journal I sent you? Did I send that to you?
I don't know if you might have. Here's I've got a log I've been using for my back trading.
Okay.
but it's
Show me that if you want.
it's more or less, yeah. Like I'll just pull up this one right here. This is Nike, what I've been doing with Nike. That one right there is what it's pretty much the same one. Oh, you can't. I gotta share my screen. Hold on. Yeah.
Ooh, that was quick. I just sent you the back trading log in Slack, and it immediately sent. That's amazing. Okay.
So this is the one I've been using for back trading. It's kind of the same one I use for my normal.
Yeah,
trading.
that's cool. I think it's for me, dude, like I want to focus most of my energy on the charts and trading. So I try to make this side of the house as efficient and easy as possible, so it doesn't. So I don't. Because, I mean, dude, it's a lot of energy to expend into all this stuff. So I'd rather that energy be so focused on the trading and spend minimal amount like looking for shit and try to keep organized. So entry 1, entry 2. I mean, do you find yourself scaling in and out a lot, or are you basically just taking it all at once?
What do you mean?
So like it says entry 1 and entry 2, exit 1, exit 2. So like that would be like I'm scaling into a position. So like I'll enter. So you've seen Jeremy or other admins talk about like a 50%. Like they'll take some here and then another half an hour there.
Every once in a while, I'll have two. I'll like sell a quarter or 30%, but most of the time, I mean, I got one entry and one exit, and most in like probably 85%.
Me too. For me, it's probably 99. Yeah. So my point by saying that is, and like, don't beat yourself up trying to keep track of all this data if it's not relevant. Does that make sense? Like, you don't need to type in the entry and exit date and the size and all and the price. It doesn't matter. That's data that it doesn't matter. And the best part about it is, dude, I was keeping a handwritten journal in a notebook of like, this is why I took it. This is what I saw. This is what and dude, you know what I found out? Like, pull that TradingView thing back up.
Okay. Oh, no, wait, hold on. Wrong one. Hold on. Yeah, here it is right here.
Great. So you've heard the expression, a picture is worth 1,000 words, right?
Right.
I'm right here.
Yep.
Yep. And then you do the copy link to chart image.
Yep.
And then, so say you have your trade set up and you have everything annotated, you have arrows drawn, all your stuff. You just copy that link to that chart image, go to your back trading journal in your comment section, boop, paste it. There you go. You're done. That's all you needed to journal for the whole thing. For your real trades and your back trades. It's that simple.
Just the link to the actual.
That's it, dude.
Do you have, but so if you do that, do you have to keep that information on the?
No.
So you could delete everything and it'll still link back to what you drew.
Because it's a link to an image. It's not a link to the actual chart. So yeah, it's here, dude. Go into the Slack and pull up the back trading log I just sent you, and you can go in there and see how I journal, and I'll explain to you why I keep the data that I do keep, because it's a waste of energy just tracking data just for the sake of tracking data. If it's not relevant to you, if you're not learning anything from it, then why track it? It's just a waste of time and energy.
Yeah, no, that's very true. That's very true.
So check that back trading log and we'll talk about it.
All right, it's opening right now. Yeah, and I'll go back and read my notes on it, but I spend a lot of time with that data entry stuff, man.
It's a pain, dude. It's a pain. And then you get really good at setting up your chart images so that you can get all that. You can literally look at it and immediately you know exactly what you were looking at. Plus, if there's any question, you can look at the exact time and date, because it's all, I mean, like you'll enter the date into the log, and then you'll always be able to, if there's something on the chart that you have the chart image saved and you're like, I need to zoom out and see what else was going on. You can just go at any point in time into your trading view and just pull it right back up and set the same thing up. So it's really great for that.
That saves a lot of time for sure.
So much, dude. I mean, half my day I was sitting here with a notebook, like saw this candle, this wick came in, this is why I did this. And it was like, literally in a second, I can see everything I'm writing just by seeing the chart.
Wow, this thing is not. Let's see what's going on here.
Slack takes a little bit, but it's cool, dude. It can just kind of download in the background and then we can. Well, let me see. It showed up in the message though, right? It's there.
Yeah, no, I've got it downloaded onto my desktop. Now I'm trying to open it, but it's taking a little while to open for some reason.
Okay. Well, there's some stuff in there that I want to show you too about like keeping track of like, because I know right now you're working on a few different strategies and we're going to talk about those. But yeah, once we get into that journal, you'll be able to see that like how I kind of keep track of different strategies all at the same time.
Let's see if I can't. All right, so it says that it's opening it here. I don't know why it's taking so long to open it. So I guess it's downloading it. I don't know.
I'll be right back. I'm gonna grab a tissue and a coffee. I'll be right back.
No problem. No problem. Okay.
Good. Any luck yet, Shep?
Yeah, it's coming, man. It's open now, but now it's saving it, I guess. And
I don't know why that thing. It's cumbersome on my end too. Even when I save it every time, it's not,
I've got
not
a
that many
Mac.
formulas and stuff.
No, and I don't know what it is either. Macs usually are very quick. All right, there it is.
Awesome.
Okay. All right. Okay. Now what are you doing? It closed and now it's reopening again. And now this is weird. I've never had this much problem before. Getting a document to open.
Well, do you know what? Let me see if mine just comes up immediately. Then I'll just share my screen really quick.
Okay. Yeah, I mean it's opening.
we
It's
can
just giving me that bar. I don't know why it's taking so long to open. It's crazy.
I think it's something with the document because it takes forever on mine too. I don't know what it is. It's not that big of a file.
All right, now here it is. All right, so all right, there it is right there.
Perfect. Okay. So right away, I mean, you can see how I kind of have it set up. I have the roles of each strategy over here, and I have each different strategy I play separated by tabs. So I saw you had like a bunch of different folders set up for each one of your different strategies. You kind of had a folder for each and every ticker. So if you just keep track of it like this with each strategy that you're using, you can easily just filter the ticker because I keep the symbols separately. And you can see all the data that way too. And then you just post the chart links over here. And
yeah.
I wonder why it's so small on my screen. But yeah, then you just post all the chart links over here. Now, can you zoom in at all? I wonder why it's so small on my screen. I can barely see. Yeah, okay, perfect. Okay, yeah, so that's great. So you can see I have the roles over here. And let me just explain to you like I want you to understand like how to track data that's relevant to your strategy, and that's kind of what I've done here. So if you scroll back over this way, so for instance, like for this strategy, this particular strategy I call the samurai. This is a reversal strategy. Basically, I'm trying to call tops and bottoms in this strategy. I don't use it that much in real life, but it's fun to back trade, and it's one of the strategies I back traded a lot. And I use a variation of it almost like a lot, almost definitely weekly, but it's not this in its purest form as it's written here. But basically what the strategy says is like, okay, if I'm trying to call like a top, then there's, or a bottom, then what data is going to be relevant if I'm trying to catch it at the top and hold for a reversal to make my R? So the data that's relevant to that for me is like, how high is the RSI? Because I want to track that. Like if RSI is at 68 and it's not working, it's not high enough, it keeps going past my entry, then I need to know that. So then, okay, if I'm taking trades, like say 80% of the trades I take at 77 or higher RSI are working and 77 or lower aren't working, then I'm only going to be taking trades that are 77 or higher. Gotcha. And in the same way, like if I'm playing that reversal and it bounces, how often is it bouncing all the way back up to the 10? How often is it bouncing to the 20? How often is it going past those into the 105? Like this is data I want to capture so that I know how long I should hold for. What's a realistic profit taking target? Like that's why I track this data, and that's why my rules come from the data that I'm tracking. So I create rules based on what is giving me the most success and the least success. I try to minimize the things that give me the least success and maximize the things that give me the most success. And I draw that information from this data that I'm capturing. Does that make sense?
Absolutely.
And the same thing, like how many candles until I get my first stop move? Like usually, like if I can trail my stop, if say I get a good move within like 2 or 3 candles, almost 80% of the time, then I know if I'm starting to get 4 or 5 candles come in and the move hasn't worked, maybe I don't want to be in the trade anymore. Or if it usually takes me 10 candles for my trade to start working, then maybe I'll be a little bit more patient in that. Like I'm not saying that one way or the other, but do you see how that data becomes relevant in setting realistic expectations for your own plan and knowing what to expect? And then from that, that's where you get confidence because you already know what to expect. You already track the data. You know what happens. You know how you win. You know how you lose. You know how long it should take. You know when something weird starts to happen that is uncommon in your data gathering. So if something weird happens, get out. I mean, that kind of thing. And then not only that, but obviously here I have every single link to every single back trade that I've taken. So if I'm having a conversation with, like, if you wanted to have a conversation with me, like, dude, this is what I've been taking. Like, let's look at these charts. Let's look at these. This is what I was seeing at the time. And here's what the setup looked like. And right away, I mean, we can talk till we're blue in the face about the setups and what's going on. But I mean, like, you see the chart. That speaks for itself. So
right.
These are just some housekeeping items that I think are going to really maximize your time and allow you to get a lot more out of your data and create better rules that's going to help us get you to a place of a higher win rate and knowing what to expect, basically.
Yep. It's cleaner. And I like having that link right there. Oh, nice. Okay.
Yep. And for each one of these strategies I have down here in a separate tab, it's just everything's in one place. I can pull up my back trading log. I know all my data's in there. I have my rules for every strategy. I even have an example picture of what a good setup should look like so that, I mean, honestly, the reason I've made this so pretty and like have like the examples and everything under the rules, just so that when I share this and people, if they want to try my strategies and they kind of see what, like I said, a picture speaks for itself. So, but yeah, dude, I mean, you don't have to do all this stuff, but I think it's good to have your rules there. And I think to separate, and obviously I have this that tracks all my
sure. Yep.
Tracks all the basic data. And then, so I just, that's a little gift for you to just save you some time and energy.
This, now I understand, because I remember looking at this and I didn't really understand what I was looking at. So I'm very like, I'm still working. And so I trade as I work. And then when I get home, I don't have time to really back trade until 9 or 9:30. So I don't have a whole lot of time to go outside of what I know. You know what I mean?
Mhm.
So yeah, now that I've got this and understand what you're doing here, this is much cleaner. This right here.
Yeah.
So again, you're saying like all you do is go to here, no, and it's copy link to the chart image
I
right
think you
there.
have the Excel sheet still up on my screen. That's what I'm looking at.
All right, so let me make sure. All right, let me make sure. Yeah. So on the TradingView page here, you go to here and it's copy link
Yep, it's
to the
that one.
chart image.
Then when you
Right
click
there.
that, you see how the dots are coming up like that?
Yep, link to
So
the
go
chart
back up.
image, copy. Gotcha.
Once it says that, yeah, you're good. Then just go ahead and paste it.
Just
And
go
yeah, dude,
paste it.
it's done. Yeah.
Perfect.
Now
I
you
didn't even
can't
know that.
interact with that. Yeah, dude, it's the best. So you can't interact with it. Like when you pull the link up, like I said, it's just a picture. So you can't like scroll back, and you'd have to pull up TradingView, go to that day, and then. But yeah,
But
I mean,
still,
yeah.
that's
So this is
enough.
an example. Yeah,
Yeah, that
exactly.
gives you
That's
I
exactly
see
what
what
it
you're
looks like.
saying. Yeah, that gives you everything you need. Okay.
Pretty much.
Beautiful, man.
And
Beautiful.
oftentimes, like I'll actually put in like two separate links, because for me, like when I'm doing my back trading stuff, like I want it to be like I kind of know how it works, but I want it to be able to give that out and see, to show people kind of like how, like my setups and how what I was looking at. So I'll oftentimes put in two images. I'll zoom out once and show and give full context of support and resistance from previous days. I'll post that one, and then I'll put like a comma, or I'll put in a separate column, and then I'll post the actual, I'll zoom in on the setup so that you can see like the intricacies of the setup itself and the broader context of what I was looking at on like a little bit of a longer, in like a wider lens. Yeah, so you don't have to do that, but that's what I do, and it can be helpful for you if you're like, okay, well, I see this setup, but this, I mean, I wonder what else was going on. But yeah, I mean, you don't have to, but that's another thing I do too. But yeah, just the setup should be enough, honestly, for intents and purposes of just being able to like go through it, review it, look at your winners, look at your losers.
All right, perfect. Yeah, that'll be a big help right there.
Awesome,
Big
man.
help.
Yeah, it should save a lot of time. Because, dude, I mean,
Yeah.
like you said, the time that you have to back trade and work on the craft and stuff, especially if you have a job, a full-time job and a family and everything. I mean, you don't want to spend like 20 minutes back trading and 40 minutes trying to collect the data and like make sure it's pretty and organized. Like you just want everything to be streamlined so you can focus on the charts and just get into a rhythm.
Bam, bam,
So,
bam. Yep,
yeah,
that's right.
I get it. Mm-hmm.
Have you ever, I'm thinking of doing this, and it might cost a little bit, but I'll write it off on taxes. Like printing out like all of your charts and having a book of like trades and charts. Have you ever done anything like that?
I mean, for me, I have the Excel sheet. It's saved to a cloud, so I have the book anywhere I am at any time. So for me, it's just impractical to have a book. But if that's your style, if you like looking at things, yeah, I mean, if that's your style, cool. But yeah, for me, I mean, like it's always there. I trade from my computer, so I want to look at the chart on my computer, like because yeah, for me, that's just how it is for me. But if that's something you want to do, cool, go for it.
Well, and you know what that is, man? That's from, back in the day when I was coaching football, we would always get reports, and I always had a book, and I like to like fill it and turn the page and see.
Do your thing then, bro. If that's what you want to do, that's awesome.
I was thinking, but I mean, yeah, I mean, I could kind of see it both ways. And like, here's what I've done, what I was doing earlier. I'll show you this. Kind of along those same lines, like this right here. Well, that's just, hold on, let me pull this up. All right, let me do this. So I'll pull up, where is it? This, can you, well, no, that's the same. What I'm trying to share, I don't know if I can. It's nothing big really. really, I had all the tabs of all the charts. I had all the charts open so I could just go tab from tab because I like being able to compare them. You know what I mean? And say, all right,
Yep.
where's looking for similarities and having all of them to where, you know, easily accessible to where I can kind of look at them all, you know, without having to open, close, or whatever it may be. You know what I mean? So
I think I know
that's
what you
why,
mean. Yeah.
just to kind of, all right, do I detect any patterns in the charts that I can just look at, you know, kind of all in one area. That's all I was thinking.
You mean like you want to see, say, like if like Twitter and like Macy's have something in common? Is that what you mean? That kind of thing?
Or, well, just well, yes and no. Mainly looking at the setups, looking at, all right, why did I lose here? Is there a similar pattern in the volume or the candles? And you know, one thing I noticed, let me see if I can share. I don't know why I can't share this.
It sounds like what you're talking about is exactly the kind of thing that you can track in that spreadsheet with its own column. So that you don't have,
right.
so that you don't have to think
right?
about. Yeah, let's look at it.
All right, so like all of these tabs open at once, so I could just click, kind of like a book. I can just go through all of these charts here and look at them. And one thing I noticed, for instance, I'd be looking at the setups. This is one I took the other day on the 22nd, Friday, and it shit on me. But you can see I was near an all-time high. I didn't see I didn't catch the evening star reversal, and it was a bad trade to begin with. But I was like, all right, 10 EMA. Per the strategy, my setup was okay because there's the bear candle above the 10. I set up above it, but it was an all-time high. There's a lot of resistance there, obviously. Could I've gotten in earlier? And I saw this candle right here. So I started thinking, well, have I missed earlier opportunities? So I clicked on this tab. Sure enough, you know, am I playing some of these too late? Like there's a bull above, there's a bearish candle above the 10 that's much earlier. Even though I won here, I could have played it earlier back here. And so, you know, sure enough, here's another chart. There it is right there. So that's why I like having all these charts at one to see so I can look, all right, where am I missing it? Am I missing something? Is there a pattern or a tendency that shows itself time and time again in the charts?
So dude, here's what you can do. Okay, so first of all, as I'm looking at this chart, are you playing primarily the 10 EMA strategy?
That's all I'm playing right now. Like,
okay, then why do you have like 77 moving averages on your screen? Like, if you only care about one, then why do you have 1,000 of them?
Here's why. All right, and you can see, yeah. And then look, this was from September 24th.
Okay.
And this is October, so you can kind of see I've gotten a little bit better at that. But my initial
other ones you're clicking on aren't showing up for some reason. Like, I still see the September one.
Oh, really?
Mm-hmm.
Well, I've got a whole tab of them here. Let me show you. Like, I guess I got to do this. I'm not sure. All right, can you see that one right here?
Yep.
All right, so this was the October.
Oh, okay. This is much prettier. Well, I mean, there's a lot of shit going on still, but
well, I've typed in a lot of this stuff right here.
That's good though, dude. I mean, those are the pieces of info that you're finding that are relevant to you.
And the reason I had so many moving averages on that when I first started doing it, I was like, all right, some of those may act as resistance, those moving averages. So I was trying to play the strategy and get a good feel for what resistance may lie above it or below it as I'm playing that 10 EMA. You know what I mean?
I do. So, okay, let's think about it this way. So let's first and foremost, we can use 3 EMAs. We can use 3 EMAs. We can use the 10, the 20, and the 105. when we're day trading. When you're swing trading, when you're doing other stuff on a daily chart that's a little bit more relevant, you can use some of the longer term moving averages, the 50, the 100, the 200, and you can still keep the EMAs too. And what I'll do is I'll send you the Pine script for, I've made these very simple on TradingView. I've made an EMA indicator that has all the EMAs I want, and then an SMA indicator. So there's separate indicators, and I can toggle them on and off as I want. So when I flip to a daily chart, I can go ahead and hit the simple moving averages back on, and then when I don't want to look at those, I just click the little eyeball and they go away. So
Perfect.
So we'll do that. That's one thing that'll simplify everything, because dude, I know from experience, when I have all these moving averages on the chart, I'm like, God damn, this one's support, this one's resistance. Like, what the hell? This one, do I care about this one more than this one? Like, which one's the most important? I can't decide. It's spaghetti mess all over my screen. So let's just simplify that whole thing, okay? And then what we're gonna do,
no doubt.
Then what we're gonna do is we're gonna focus on the moving averages. Now will become confluence, and what we're gonna use as our support and our resistance is the structure of the chart. We're going to look at the other price action, and then the moving averages will just be a nice little confluence. They'll just reinforce what we're already seeing. Instead of having to rely on them, we'll have a fundamental understanding of the chart structure, and then we'll use the EMAs as like little helpers instead of relying on the EMA to tell us the whole story. Does that make sense? Because the EMAs are lagging indicators. The EMAs are made based on the price action. The price action occurs, then the EMA catches up later. So what's already on with the price action for me is the fundamental, that's the root. Okay. And also the EMA doesn't account for volume. So, I mean, there's a whole lot going on beneath the surface of those EMAs that I think is a lot more important. And then the EMAs are just a little helper. They make it a little bit easier to do the same thing over and over again. Does that make sense?
Absolutely. Absolutely.
More systematic, I should say.
Well, and that's interesting too, because I just learned really that the EMA, even the 10, I mean, it's a delayed, it's not live, it's not now data. It's
exactly. It's a lagging indicator.
Data. It's lagging. Exactly. Yeah, that's the word I was looking for, a lagging indicator. Yes.
Yep, exactly. And dude, there really is no leading indicator. We don't know what's going to happen. The leading indicator, I guess, is pattern recognition. But it's at best, it's just giving us an idea of what could happen, and we're trying to stack the odds in our favor. So that's why it's tough. Like, it's tough to rely on anything other than support, resistance, volume, and what the candle's doing, because those are what's happening right now on this candle. And that's what, for taking entries and stuff like that, that's what matters. So, okay, let's head over. Let me just look at this real quick and see if there's anything right away that's screaming at me.
Well, other than the fact I tried to play it at an all-time high.
Yeah, I mean, dude, it just seems like. Let me pull up my screen. We'll talk about it.
Yeah, here, I'll stop sharing.
Or you know what? Go ahead. Why don't you take your screen, and then let's just go look. Let's just go back trade a little bit, and then tell me what you're seeing and how you're taking trades, and then. We'll take all this, and then we'll find a way to get it into your journaling.
So let's see. What do you want to go to a day and just
what do you trade? The 5 minute?
Yes.
Okay,
yes.
so I'm gonna give you another little let me send you these indicators real fast. Wait, what do you have on your screen right now? You have RSI
right now.
You have the 10
RSI.
Man, you got a lot.
Well, I don't use them all. Really, the main ones I use, sometimes I use those, but mainly the 10 EMA and the VWAP.
Okay, so the VWAP is doing something for you. It's the same thing. It's lagging. You're relying on. The VWAP is looking at the price action and the volume, and then it's doing some math, and it's putting a little line on the screen. what your human eyes can do and your brain can do with some practice will always outperform that, because you'll look at the actual volume on that candle and know what to do. Like you'll know what to do before that line has a chance to even move. So for me, I think it's better to practice without that stuff, so that if you do choose to use it later, it's just help. It's not, you're not dependent on it. Does that make sense?
Mm-hmm.
That like when you start to look at the chart and you're like, this is what I see, and then you turn the indicator on, it's telling you the same thing. That's confluence. That's good. But
Yeah.
if you feel like you can't do it without the indicators, then we want to get you to a place where if there was nothing else on the screen, with just support and resistance and volume.
And see, that's interesting, because I've never tried to back trade it. Because to me, the whole strategy was based on, and again, I can be very programmed. I'm trained like a stuck pig, you know. You tell me to look at something on the 10 EMA, then I'm going to be looking at what's on the 10 EMA. You know what I mean?
And dude,
basing it off of.
That's a great, that you'll see how that has value, because it does take a little bit of the discretion out of it, which can be helpful, but it's not the full picture. Like, you need to understand support and resistance, or else the 10 EMA strat, no, you could get away. Okay, so if you just back traded, if you back tested the 10 EMA strategy arbitrarily, literally like this, and you just day after day, trade after trade, you just took it, and you were sure that on that ticker that you back traded on, it worked over 50% of the time for more than an hour, you're done, dude. That's it. It works. Fine. Don't do anything else. But if you want to increase, if you want to maximize, if you want to optimize the win rate, like, okay, if I just leave it on and I take every single trade that meets the criteria, which is over the 10, and it closed. So if it's bullish, you get a bear candle that closes over the bull candle that closes over 10, then a bear candle that closes over the 10, and you get it on top of that. If that's all you're thinking about, then, like I said, you plug it into a computer, you know it works on that ticker, that's it, you're done. But now, what if we start adding in, okay, it needs to be at a support level, and then give me that ticker, and have at least 1 R worth of room above it until the next resistance level. Now we're taking a win rate from, say, 52%, and we're giving that, we're amping it up to 70% or 65%, whatever it is. And then you start to play with, okay, well, how much room needs to be overhead? Do I need 1.5 R's worth of risk until the next level of resistance for my trade? And then maybe your win rate comes down a little bit because those setups are more rare, but your risk reward goes up. But without understanding support and resistance, you can't do those things. You can't optimize. Without understanding the fundamentals, you can't optimize. You can only basically like do exactly the same thing and find a ticker it works on. And then when that ticker changes, when it's in a different sentiment, it's a different cycle of its, because markets are cyclical, tickers are cyclical. If it's, say that works great when the ticker's trending, but then it starts consolidating and it's not working anymore. Now you got to go find a new ticker and back trade the shit, not back trade, but back test the shit out of it and see if it's going to work. And it's like, why not just be supple and be able to apply it to any ticker, or at least a handful of tickers? Because like, I'm not a big fan in chasing tickers. I'm a fan in having like a list of 10 or 15 and like a real list of like 5 and just trading those all the time. So like, I'm not really huge into chasing tickers anyways, but wouldn't it be nice to be able to adapt and be supple with your same strategy, but be able to more quickly adapt because you understand the fundamental structure of the chart? Does that make sense?
Well, and you mentioned yes, and you mentioned something there that I've been looking at, and that's optimizing. Like, don't get me wrong, I'm thrilled to death that in my first month of trading or 2 months, I haven't lost my ass. I'm up, I'm profitable. I can make some bill payments off of it, but at the same time, there's a lot of room for optimization there. There's a lot of room to make it more efficient. You know what I mean?
And that's what we're here to do.
And that's kind of where I feel like, all right, now I've learned enough to be dangerous. I've learned enough to lose everything. So now how do I, instead of losing everything, how do I take it to that next level and
Exactly.
become even more profitable?
And that's awesome, dude. So I think you've had some really good experience in the past couple of months. You've been following rules. You've been journaling. You've been doing the work. You've been back trading. So you're right. It's time to take the next level. So the next level is a deeper understanding. That's where optimization comes from. A deeper understanding of what goes into making the system work. So let's do it. I'm going to pull my chart up. I'm going to share my screen.
All right. I'll stop.
I'm
this.
going to
All
pull
right.
my TradingView up. Okay. So what's the ticker you like?
The three that I'm focused on right now, Nike, Tesla, and Nvidia, are the three that I spend a lot of my time on.
Okay, this is another thing that's going to blow your mind. I don't know if I showed you this last time. Okay, so see this?
Yep.
Boop,
Interesting.
boop. So everything's off now. I can't see a goddamn thing, right? Now I could go, because I'm not giving myself any clues. Just pick a random day here. Well, yeah, let me make sure. Yeah, okay. Just pick a random day. Go to that day. Come up here, grab your back trading thing. Go to, oh wait, I'm on the daily. Oops. Doesn't matter though, look, it still works. So I'm gonna go to any random day, July 15th, July 14th, whatever. And you grab your back trading tool, you come to the last candle of the previous day, turn everything back on. And now you get to simulate real market conditions because you have absolutely no idea what's gonna happen, right?
That's pretty, yeah, I haven't been doing that. I've been just kind of, I didn't even think
welcome.
about that.
This is the next level, man. This is where it gets tricky because you have to simulate the real market conditions.
Real deal.
Yep. There's no, because dude, I mean, I used to back trade that way too. And I was like, dude, it's not the same. I kind of have an idea what's going to happen. Like, it's not the same as like sitting there at 9:25 waiting for the first candle and like having no clue what's going to happen. This is the same. This is the same thing.
That's
so
you're in the game.
So what it does is it makes you be patient and look at more information to get it. So, okay. So I'm just going to, you want to just click through candles and then we'll start talking. Like when you see something, just start yelling it out.
Yeah.
Okay. So right away, you see anything?
I see a bearish hammer that it closed on with the big bear with a lot of volume right there.
Okay, so another thing. So if you come up here on your screen, you should see a little black drop down thing.
Right.
Okay, you can click the annotate tool. And now you can draw anywhere on this chart at any time. And then we'll just go through it that way. How's that sound?
Okay.
So you want to do a little test circle or something? Make sure you got it.
So wait. Oh, I can do that. I thought you said.
Yeah, no, you can do it. Yeah, you can annotate. You can draw on the screen. So there's this little black thing up here on your screen, and it should have like the Zoom stuff and everything. And then there's like a little thing that says annotate.
Yeah.
Exactly.
Oh, I didn't know that. Perfect. All right.
Yeah, and then as soon as you like draw it or whatever, yeah, you can go clear it. Exactly. Perfect. Okay.
Excellent.
So yeah, so when you're doing your analysis and you're doing just the 10 EMA strat, like maybe this would be better if you just did your screen. Yeah, I think that might be.
Whatever.
I think it'd be
whatever.
Better. Yeah, because you're gonna be the one driving. So let's just do it that way. Let me go back. Stop sharing my screen, and then I'll just do the annotate because I'm gonna be just mainly watching and critiquing instead of like. I think it'd be better if you drove. So let me.
Okay.
What the heck do I? Oh, that way. Okay, I stopped my share. So go ahead and do yours.
All right. So let's see, to get it
Yeah, so there's like a, yep, a
That,
little eyeball. All these, turn the volume off too, because the volume tells you stuff up here. Yep, that one.
where
And
was it?
then
Where was the volume?
right here.
Oh, there it is.
Yep.
All right.
Now right click, remove all drawings. If you're done with this chart, or is this something you're still looking
Yeah,
at?
yeah, yeah. That's
Okay.
I can.
Yeah. Well, yeah, you can just remove them all. Yep. Okay.
Yeah, I can go
Now,
back. All right.
now, yeah, down there on your little calendar. Any
Doesn't
old day,
matter.
any old, yep, doesn't matter. Now, before you start turning stuff back on, you want to activate your back trading thing and then go to the last candle of the previous day.
Right here.
Yep. 1455.
All right.
I think you're on the first. It
Did I
doesn't
do it?
matter. Okay, we'll get it next time. Yeah, so now turn everything back on.
Oh, there it is. All right. So,
Yep, you got to turn this back on too. And then, yeah, just turn your 10 EMA on, turn your volume on, turn your price action on. And then, yeah, actually, one more thing too, just so that we're looking at the same thing. Because I do recommend that you have one midterm EMA on while you're day trading. I mean, it's just nice to have it as a little
okay.
reference to come up here.
Right.
And I'll send you my stuff after this too. So it's all in one
Okay.
place. And then just type
All right.
in moving average exponential. Yep, right there. Okay, now that's on here. Now you'll see this down here.
All right. So that's
Go
good right there.
hover over it. Now go to the cogwheel, this one. Now inputs. Length, put that at
All right.
105, 105.
All right.
Now go over here to your style. Do it up, make it pretty, do whatever you want to it. I would recommend
No, that's
making it a little
good.
bit thicker than your check that out and then do the second one. Yep. And then so now you just have and it should be a different color obviously than the other ones.
Yeah. Yeah. Okay. All right. So,
And just for another layer, dude, because why not? Go up, do another another EMA. Do you have the one where you can like have a million like indicators on the side?
well, this you're talking about the model or the brand or the version.
I'm talking to the version, because you have like I'd be like way over my limit by now. That's why I had to make them all.
Yeah, I guess I upgraded, so I guess I do.
Okay,
I
cool.
don't even know what I have, man.
Okay, well I'll make this more efficient for you too afterwards. But just since we're here already, so yeah, add another one and do the 20 EMA. So same thing, and then instead of the length 105, just make it 20.
So moving average exponential. Okay.
Go in there.
Here.
Yep.
Inputs 20.
20. Okay. And then go to style. Make this one red. Blood red. No, the one thickness is good. The thinness is fine. If you can see it, if it's easy for you to see.
Yeah. Yeah. Okay.
Okay. Now go up and make the 10 green and the same thickness.
Okay.
Okay.
Same thickness as the red.
Okay.
Okay.
So now we have 2 more layers of information that we didn't have before. So is price back on? Where is it? Yeah, I don't know what price is like. Price is like 170, so we just need to drag up a little bit, like grab the screen and drag like that. Yeah, we should be coming up there any minute now. There it is. Yep. Okay.
There it is.
Okay. Right. So right away, what are we seeing here? What are you seeing?
Well, we're first off been in a downtrend today below the 10, but it closed on a strong candle with a lot of.
That's actually the open, I'm pretty sure. Is that the open or the close? That's the
It
close.
says 14. Yeah, that's the close.
Okay, great. Perfect.
So we've got a bearish day just for the day. You can see here below the 10. But it closed very strong, peaking just above that 10. And you've got that 20 right there over the top of it. So bearish day with a bullish close and a
Okay.
big volume spike.
So is that your whole process at open? Is that what you're doing in your analysis?
For the most part, yeah. Just kind of looking at the day, the overall trend.
You stay on the 5 minute, you don't look at the daily?
I will, yeah.
I would I would say just stay on the 5 minute. That's how I trade. But I just want to know what you're actually doing.
Yeah, I may do this. I'm not spending a lot of time just kind of looking at. Just last week, I started looking at where is it in relation to the 100 and 200 SMA, just seeing if it's going to bounce, if it's close.
If these are tickers that you're trading every day, then you kind of have a general idea of where they are in terms, right?
That's
so
right.
You don't necessarily need to consult the daily because you already kind of know where it is.
That's right. And I don't.
Is that fair to say?
I don't. Oh yeah, I don't spend much time on the daily at all. But mainly, what I'll do is I'll go in, I'll look, I'll pull back, and I'll be like, all right, let's go draw our support and resistance lines.
Beautiful.
Most of the time they're already on there, and I'm either adjusting them, to say, all right, here's the last few days resistance, make that red. Then I'll say,
bro, there is so much optimization we can do on every aspect of your charting, your journaling, everything.
That's why I reached out to you, dude.
Bro, you don't even have your favorites tool set up. This alone is going to save you so much time because you're going all the way over here, clicking this, changing.
Hey, I'm telling you, it's like I've been on a training, like on training wheels, and now I'm sitting on a Harley and I don't know how to start it. I'm just drawing line, but all right, there's the resistance, there's the support. That's how I'm doing it right now.
Dude, that's all you need to do. What I'm talking about is just the ease of use of the platform itself. Like go over here.
Okay.
So just click on that. Now look,
click on this.
So if you go to the side, you see how there's all these little stars when you hover over it?
Right.
So which one do you use the most?
Probably this one.
Click it. Okay, now look. Boop. It's always on your screen whenever you want it. All you have to do is click it. Now I recommend adding, I'd give yourself a trend line. I'd give yourself a little arrow. I'd give yourself a little horizontal line. Somewhere, this one. Yeah, I'd give yourself all that stuff. Now look at this, your little tool. You don't have to go over here and click it every time. It's right there.
Oh, that's sweet, man.
Yeah, dude, it's going to save you so much.
It's like a brave new world.
Yeah. Okay, so that's probably good for now, just to get you started. And then go here to this one.
And now I use the fib. And that's about all I use.
Put that on there. Okay, and then wait, where is this one? You need these, dude. You need the long and the. You need those. Those are so amazing. Yeah,
those are essential. Yep.
Okay.
Yep. Okay.
So now here you go, dude. So now there you go. There's all your stuff right there. You don't have to come over here and piss around. You can just right there. Always there for you.
Is there a way to put these like in this blank spot right here?
No, but you can just grab it and move it up there. So the way you move it around is with this little part right here, this little part with the dots.
Okay. Yeah.
You can put it anywhere you want. Yep.
Yeah. Okay. All right.
Same with all these other ones. Yep. You can just put them wherever you want.
I'll sit it right there. Okay. Cool. All right. Mm-hmm. Yeah. That's awesome. I didn't even know.
And dude, not only that, but like, okay, grab this horizontal ray.
Okay.
Now instead of Go ahead and grab one, lay one down. Anywhere. Put it anywhere you want. So draw like a support line that you'd want to draw. Like, how do you like your support lines and resistance lines drawn? Because I see you going in there and you're changing the color and stuff. So show me how you, like, if you could have it the same way every time, how would it be?
So you're talking about this. So that would be resistance, the red.
The line itself, that's how you like to see a resistance line? That's, if you could style it and make it like that anytime, you'd like that? That's how you want it to look?
Yeah.
Okay.
Now, unless like that's kind of like what I do for like a big resistance. I may go, what happened to my, oh, there it is. I may do this and like on the daily, or as I zoom into the day, like I may do that, but have it at one thickness. You see what I'm saying? So like
I see exactly what you mean.
Intraday resistance, and then like a major or all-time high resistance.
So something that you might enjoy. And if you're already in the groove and you like doing it that way, then don't change it. But I'm just going to show you that this option exists.
Yeah, no, absolutely.
So click on this line. I'll right click. Yeah, there you go. Come here to template. Oh, look at that. You made all these last time.
Yeah. I've done some of this. I've just never made it for the so yeah, I've got some of these down here.
Okay, cool. Yeah, I thought we talked about that last time. Yeah. So okay, you already know that.
Sometimes, so like I guess you click there and but how do you get how do you get that template to pull up?
You right click so you draw the line and then you have to right click the line that already exists and it'll change.
I got
so you. Right click, go to templates, and then pull up the template you want. There you go. And it'll just change to whatever one in that same place.
Yeah. Okay. Gotcha. Yep. Okay. Yeah. All right, cool. Okay.
All right.
Yeah.
That's ready to start trading.
Yeah.
Good, dude.
Okay. And so then, and usually what I'm doing is just kind of see if I'd really kind of forgotten about that. Yeah, like that support. So this is what I'll do usually before the day or that night, getting ready to head into the period. Then I'll kind of go into the most recent days and kind of do the same thing. If there's like enough support level, like right here.
Yeah, dude, you do have a bunch of those templates in there.
Yeah, I do. I set them up, I think, after we talked one time, and then I have a lot of them that I'll use to mark the trade, like 1R or 0.5, just different levels of the setup once the trade's going.
Yeah.
All right. So usually that's kind of what I'm doing, kind of getting it to look about like this: 3 or 4 lines, some resistance, some support, and that's that's pretty much what I'm doing. And then just kind of looking at the prior day or 2 days or 3 days candles before I go before the day starts.
Okay. So is there ever a day that you don't take a trade, or are you taking a trade every day?
Man, and that's probably a bad habit. I'm addicted. I take a trade. I'll take at least, I mean, dude, if you just look at let me show you, and we'll pull, like, if you just look at my journal here, let me pull this up. So can you see this?
Yeah.
All right. So you can see Friday, I took 4 trades. Thursday, I took 3 trades. So, you know, yeah, I'm taking multiple trades just about every day, man.
It's not bad. I mean, necessarily. I mean, dude, it's working, you know? So, but also, if we go back to your journal, so you're only doing this 10 EMA strategy? That's it? Because I
Yeah,
heard you talk
for
about
now.
like you're doing different gaps and stuff like that. Or
Well,
are you playing the gaps with the strategy?
So I've only played the gaps twice. Okay. There's only one strategy that I know, you know what I mean? And that's the 10 EMA from a day trading standpoint.
Mhm.
And again, that's because, you know, this is also new to me. I don't even know how to form my own strategy. So I took one, back traded it until I felt like it would work, and then started playing it live. And it's
Yeah,
worked, you know, so I've stayed with it. The gaps, I've only played 2 gaps. Now I back traded a lot of gaps, but I've only played 2 live. One was beautiful. Peloton came down, retraced to the penny, shot up to 1R in less than 5 minutes. It was perfect. And then I did Zoom the other day and it shit all over itself and stopped me out in a minute.
Okay, dude. So I would say that for now, until we talk about how to play gaps, like that's the whole thing in and of itself that we can talk about. So if you want to go that direction, we can go that direction. Or do you want to talk about the 10 EMA strategy and like how you've been doing it? And because I know you said you want to optimize it. So maybe we start there, unless you're like, this is boring, I want to do gaps.
I just want to win, you know, and have multiple tools. And the 10's been great. I mean,
okay,
but
well,
I know there's more I can learn, and I want to be more versatile as I go.
Mm-hmm. Okay, so yeah, let's just walk through. Let's just start trading. See how it goes.
Hold on, I got to do one thing here on this because I'm used to seeing it like that. I'm going to change that to purple.
Whatever color, whatever, doesn't matter.
That's how I'm used to seeing that 10.
Yeah.
Okay. All right.
Now just keep in mind with this, now that you have that 20 on there, all that's doing is just giving you a general idea of the micro term trend. So if the red is underneath the your 20, your 10, sorry, the 20 is underneath your 10, that's considered bullish momentum. And then vice versa. As you can see, we're in a downtrend here, pretty straightforward downtrend. The 20's on top of the 10. That's more bearish.
That's interesting, man. I've not done that. That could help. So what I would do then.
Well, there's a whole strategy on just the 10-20. It's called Momo. When one crosses over the other, you go long. Or when the 10 crosses on top of the 20, you go long, and when the 20 crosses on top of the 10, you go. Is
that what this is? This trend following Momo?
That's exactly what that is. Yep.
Okay. I was wondering what that was.
That is exactly what that is.
Okay. That makes sense now. So So I'd be sitting here and just watching.
No, don't do that. Press each candle as they come in. So this one. You should get into the habit of watching each candle as it comes in.
Oh, so just
because if you press play like that, in my experience, and this just might be me being crazy, but I feel like you get used to the tempo of that, like taking like that long for. I think it's just better if you look at each candle that comes in by clicking them through.
That's a good point. Yeah, I like that. And now, what does this do? Does this?
Because now you can stop at any time. Like you have, like the candle doesn't go till you say go. Instead of having to press pause, then rewind it. Now you can fully digest and press next.
In this situation right here, which I have yet to take a short trade on Nike, I'd probably short it based on the 10 EMA strategy. Okay. And so I'd come in here, and here's another thing I wanted to, like, stops. So like with stops, do you just play the candle? You know, should I move it up a little bit to have a little bit of backup on that with the EMA there? And you know, what's your philosophy on stops? And I'm always setting my target at 1.
I'm super pumped because now we're getting into the goods. This is the goods. This is the stuff right here, Chef. This is where the money is made and lost. Okay, so right away, I heard you say I always put my target at 1. What if there's not enough room to hit that target until there's a bunch of resistance or support? You're just throwing it there. You don't even know if there could be a house in the way.
Mhm.
Like, so if you're not sure that there's enough room to hit that 1, then first you don't take the trade, first of all. But how do I know if there's enough room? Because my target at 1R is just a function of where my entry is versus where my stop is. So the stop comes first, right? So when we're thinking about stop placement, what do we not want to happen to our stop?
I don't want it to get hit.
Exactly. It's that simple. I don't want it to get hit. So if you don't want something to get hit, so we have a moving object, here's something right here. I don't want it to get hit, but I can't move this. It has to stay right here, but I don't want it to get hit. What do I need to do?
Well, move it.
You can't move it.
Well,
it has to stay right there. So what do?
Well, you set it to where you don't think it'll get hit.
Exactly, by putting a bunch of shit in the way, right? You stack a bunch of barriers, you put a bunch of shit in the way. Now I can't get it. I can't hit it because there's all this stuff in the way.
Gotcha.
Right?
Right. No, yeah.
So
absolutely.
So how do I protect the stop? I put a bunch of shit in the way so that it can't get hit. What's the shit? It's resistance and support.
Yep.
That's what that is.
These so moving averages, that support line.
Exactly. This stuff all right here. So if my stop's up here, price has to go boop, boop, boop. It has to hit up through all this stuff and then punch through. If my stop is right here, it just needs to go boop through this one little candle.
And I'm done. Yeah.
That's it. If my stop is up here, it needs to go through all this stuff. It needs to come all the way through this midterm moving average. It needs to get through all that stuff. So you see, it's a function of where can I protect my stop and still have enough room in between, because it's the same thing. Your target is the space between the next, you're trying to hit someone else's stop, basically. So where is there the least amount of protection for me to hit? Your target is what you want to hit. So you want to set it up that there's the minimal amount of stuff in its way. It's easy to hit it. In fact, ideally, your target is so easy to hit that all you have to do is drop a ball and it'll immediately hit it. It doesn't have to do anything. It can just fall. You don't have to push it. It can just fall right to it. Or in the same sense, think about it as like a rubber band. If your target's above you, all you have to do is let the rubber band go and it'll hit it. There's nothing in its way. It doesn't have to push through anything. It just can go up and hit it. So that's the way you need to start to think about your targets and your stops. What is it going to take to go ram through? Like, what is it going to take to hit my stop? Does it need to ram through a bunch of stuff? Or can it just go hit it? Like, the more stuff I can put in the way of my stop so that to protect it from getting hit, not only the lower chance it has of getting hit, but say I put my stop up here, okay? My entries, I don't know, somewhere like this. Not only, actually, let me change that a little bit. So my stop is up here and my entry is something like this, okay? So my entry's here, my target's here, my stop's here. Yeah, just set it any old way. That's fine. Yeah. Yeah, I think I kind of butchered that, but yeah. You're right. Let's use the actual chart as it is and do it that way. So, okay, so your entry in this strategy would be there. So you want to protect your stop by putting it somewhere. That's fine. Let's put it up here. Okay, that's fine. That's good. So here's your entry. Here's your target down here, and here's your stop. So what needs to happen if you get triggered in? So let's say the next candle comes in, triggers you in. Just click the next candle. Yeah, let's see what happens.
That's only a 0.5 risk reward.
We'll get to that.
Okay.
So just hit the next candle. Let's see what happens. Okay, perfect. Now you can scoot your stop up, right? Or your entry up, right?
Yeah.
Okay. Now, would you do it like that? Would you leave the stop where it was, or would you move the whole trade up?
I would Well, I mean, typically
Just tell me what you do.
I'll adjust the whole trade off of that 1R.
So you'll just grab this whole box and move it all at once, right?
Yeah, and then have to re-enter everything new, the new writ, because I'm again, see, I've been thinking 1R. So my stop, here, let me show you something I have too. All right. So this is what I use when I'm doing my trade. This is how I'm figuring it in. It's not pulling up. All right, so I made this because this is like, and it speaks to what you were saying there. So like, if I get something like that, then I will go here and type in my entry and my stop to get the number of shares that I'm using. And so
Bro,
like,
you don't need to do that. You don't need to do that at all. Go back to the tool. Go back to that long and short position tool.
Yep, right here.
Okay, click on it. Go right click, do settings. Settings. Okay. Account size. Let's see. Annotate. Account size 30K.
Oh, dude, I had no idea about this,
bro. This is why this tool is so amazing. Like TradingView is the absolute best. Risk 1%.
Oh, bro.
Dude, I know. Like, this is gonna save you so much time. If it's one, is your R $300?
Yeah, yeah.
Then just 1%. Yeah. Perfect. Okay. Yep. Okay, you're done. No, actually, first, real fast, go here. Save as the wait, no. Yeah, save as, and then just put in default. Or you could even put in like 30K, whatever you want to do. But yeah, just make it your own. Know that this is it. So that way, if anything happens, you can just come back in here and click that. You don't have to go back and type everything back in.
Gotcha. So that's all you do. Count size,
dude, that's it.
Risk. Okay.
You press OK. Now I'm prepared to have your mind blown. Now look, 167. With this setup, you can take 167 shares. Boop, that easy. That's it. You're done. Is that not the coolest thing you've ever seen in your life? That makes trading like it's so easy. I used to have a sticky note with all the math written out on it for every cent so that I could just look at it and see. And now like it's so simple.
I mean, I've been going,
thing in the world.
So
everything. Does
it tell you
right here?
That's how much the trade's going to cost. 30.
Yeah, 0.56R for your account is exactly $167.6.
And so placing this trade would cost you that amount right there. Or
no. So that it doesn't do. So
okay,
but okay. I mean, you don't have to worry about
it. Still, you don't have to know that. Yeah.
If you have the buying power, I mean, as soon as you put it into your, it's going to tell you. If you try to put it in, you don't have the buying power. It won't let you do it.
No. Yeah. Perfect.
So I mean, and since you trade the same tickers all the time, that 200 times, I don't know, round up, say like 200 times 200 is 40,000. So as long as I have 40K in buying power, which you do because you have 4 to 1, so you have 120K.
Yep.
It's probably never going to be a problem. It shouldn't really be too much of a problem.
See, I've actually got about 33,000 in my account because
from winning. Yeah.
But I keep it at 30,000. I haven't moved it up.
Yeah. Yet. Don't touch that thing. Don't touch it. Leave it the same. Yeah, I mean, dude, now after a year, when you've been trading and you're like, okay, you know what? I'm ready to make $1,000 every time I win an R, so that I can only take 4 trades a month and I have $4,000. Yeah. Then do that. But until then, when you stop thinking about money and you just see it as an R, that's all it is to you. And you're so confident in making R's, not dollars, but R's. That you can make 2 R's a week. You know that you can make 10 R a month because you do it all the time. The dollars don't exist anymore. It's whatever you want it to be. You plug a number into that R, that's what it is. So don't think about it as a dollar. It's an R, period.
Yep. Beautiful. This is huge right here.
It's amazing. Yeah, kicks the can back with
Totally.
excitement. Let's go. Yeah.
Totally changes my entire process, man.
Makes it so much more efficient, so much more fun, so
yeah.
much easier.
Oh my gosh. Okay, now we're cooking.
Yes, we are. Okay, so this is great. So now you know exactly what's going on. Okay, so back to what we we're talking about. So if my entry's here, okay, if my entry's here, what do say I get triggered in here? Where, like, what's in between me and my stop? I have all this stuff now, right? So what I think I was getting to is not only are you protecting your stop, but you're giving yourself a chance to break even when a trade's not working. So what would happen in this particular scenario would be, say I get triggered in, and then price immediately makes a double bottom and starts coming up here like this. Now, if my stop's right here, if it's underneath this stuff, it's just going to bounce off of this. And if it goes through, I'm stopped out. And if it hits it and bounces, I'm stopped out. So either way, it's a lose-lose, right?
Right.
So wouldn't it be better if my stop was here and had some protection, and I get triggered in, it makes a double bottom, and then it bounces. Now it has this stuff to bounce off of. My stop's all the way up here. I'm still safe. It bounces here. And because if it's going to make a move up, if it's going to get through this stuff, very rarely is it just going to nuke through it.
Right.
It almost always needs a chance to retest and give you a chance now to, how is this looking? Can I get out now? Should I get out? Is this looking like it's not going to work? Or at a very minimum, as soon as this now breaks through and it starts to break through, now you have a chance to trail your stop and lose less than an R. At a bare minimum, you can lose now less than an R. If it's looking like this, I mean, and it's not looking good, because if it's consolidating here, as soon as it does break out, it's just going to keep barreling. Yeah. Then at least now, if it's consolidating here, like this, something like this, it bounces, it starts to consolidate. Now I know, okay, if it breaks through there, I don't want to be in it anyways. So I'm just going to trail my stop. And now maybe I lose, I don't know, 0.6 R, 0.8 R instead of a full R.
Yeah.
Those little things like that.
Yeah.
That's how you get that risk reward up, because now you have a chance to not lose a full R. If you're going into a trade every time and you're going to lose a full R every time, why? Like, why subscribe to that when you have a chance to lose less than an R and make at least one R? If you're losing less than an R and you're making at least one R, you don't need to make 1.5 Rs, because you're losing less than one and you're making one. So right away now, your risk reward is automatically, all you need to be is 50% win rate and you're profitable. So if all you need is a 50% win rate to be profitable, now we don't have I don't need to make a 3R trade. I don't need a 4R move to be profitable. I just need an R. I just need one R, because I know I'm probably not going to lose a full R. It's going to be uncommon for me to lose a full R. It might be uncommon to make 3. It might not happen very often. Might not happen very often to make 2. But you're always losing less than 1, and you're always making more than at least 1. All you need is 1 R, bro. You get 1 R a day. What do you need in life?
Yeah,
because when that R is $1,000,
man, I've pissed away. I had 1.5 hours before noon, and I'm like, all right, I'm bored. I need to make a trade. And I did something stupid and lost an R,
But would you do that if you had $1,500, would you do that? Would you be like, I'm bored. I don't care if I lose this $1,500. I'm bored. Fuck it. Like, dude, $1,500? You kidding me?
I know.
If you have $1,500 that you just made that day, first of all, you're not working. You're not working anymore because you're making $1,500 a day.
Yeah.
So when you're bored and you just made $1,500, go do something that only costs you $100. You still have $1,400.
Yep.
You can have a lot of fun with $100.
Yep. And
you can do anything.
I mean, you look at some of these days. I mean, like on the 21st. I mean, I hit an R in a matter of minutes, and then I turn around and said, well, I'm going to make another trade because I'm trying to get to 2 Rs, and I lost it.
Why?
Because I got greedy, man. And then I ended up getting lucky with Nike, and bounce through for a little over an R, you know, but my goal, here's why, because I heard someone say my goal is to make 2 to 3 R's per day. And I'm like, well, if that dude can do 2 to 3 R's, then that's what I'm going to shoot for.
You don't know if they're doing it. That's just their goal.
You know,
you don't know if they're doing it, and you don't know their plan. You don't know their win rate. Like dude, they might win. First of all, dude, if you're making 2 or 3 hours a day,
you're a baller. That's what I figured.
I don't think it's that likely. Like I'm not making that. I'm a damn good trader. I'm not making 2 hours a day. I don't want to.
Yeah.
I want to win consistently. I want to win most of my trades. That's for me is better for me. I feel I'm a very competitive person. I want to win.
And after last Thursday and Friday, that's what I said, man, screw this 2 to 3 hours a day, man. I'm going back to where I was a couple of weeks. And you can see I'm a newbie, man, because I'm wavering. You know, at first it was like, man, I just want 1 hour a day. And then I had a few days where I was right at that. And I'm like, okay, this dude said 2 to 3 hours. I'm going 2 to 3 hours. Screw that.
I've been exactly there. It's part of the process. It's part of the process. It just happens, dude. It's part of the process. I did the same thing. So I want you to shift your mindset into, I want to win today.
Yeah.
If I win or do not lose, if I don't lose, I win. And if I win, I win. If I lose, I lose. But if I don't lose, that's a win. Because this is the market, dude. There's people out here trying to take money out of your pocket and put it into theirs. Yep. So if you don't let them do that, you just defend your capital, that's a win. If you win and you take money from them, that's a win that feels pretty, like a little bit better. But dude, when you lose, that feels like shit, right?
Dude,
so it's better to not lose.
That's right.
And win. Not lose as often as possible and win as often as possible. And not losing is a win. Once you start feeling like, you know what, dude, I didn't lose a dime today. I traded, or maybe I didn't trade and I didn't lose a dime. Maybe I said, you know what, nothing looked good enough for me today. And I had the discipline to not take a trade because nothing looked good to me. Dude, after a while, and for me, it took like losing like $30,000 in a month to be like, you know what, dude, not losing feels so good. Like just not taking a trade and not seeing my account bleed feels so good that like it for me became like a win. Like it's it's a win.
Yep.
And it's changed my trading, dude.
And see, I need to get that discipline because I've pissed away probably in the last month 5 hours just on stupid trades.
Bro, and my goal for the month is 10 hours. You pissed away half my goal.
I mean,
like imagine when everything is firing on all cylinders. The hardest part of trading as a beginner is calibrating your expectations to be realistic. That's
the best thing I've heard anybody say. That's absolutely
it's true.
Right.
Dude, we all come into the market. We want to be millionaires. This is goddamn Wall Street. This is the stock market. I want to be a millionaire. I want to 5x my account in 3 months. Like I want to buy a Ferrari. I mean, I don't want to buy a Ferrari, but like all that stuff. Like that's why we're here. Let's not be ashamed of it. We want to make money. We want to 4x our account. We want to never have to think about money again. We want to buy cool shit. We want to eat good food. We want to have vacations. We want to go cool places. We want to live and not work. We want to live our lives in a state of abundance and freedom. That's why we're here. There's nothing wrong with that. But the thing is, you don't have to make $1 million every day to make $1 million. You just need 1 hour a day because you don't even need 1 hour a day, bro. You need 10 hours a month. You need 5 hours a month. It doesn't matter because this is the only thing in the world that is immediately scalable. If you can make 5 hours a month every month you can make 5 hours a month and your R is 10K.
That's right. I've never thought about it like that.
Dude,
it's totally scalable. It's 100%.
It's the
scalable.
only thing in the world. Like, dude, I just had this conversation with another student, or I shouldn't say student, but another guy I was working with yesterday. And he's a new trader too. And he was like, dude, you know, Jeremy said that like, you have to think about this as like you're in the NBA or you're in the NFL. And I said like, and he's like, well, I'm not, dude. Like that's 1 in a million people. Like I'm not that good. I'm never going to be that good. And I was like, dude, that's not what he means. What he means is you need to be a professional. You need to show up. You need to do the work. You need to master the craft. And the example that I gave to him was like, if a mechanic can take your car apart in like an hour. I can't do that. I have no idea how to do that. It would take me probably a year to learn and 2 years to be really good at it. But if that mechanic spent all that time learning to trade the market and dedicating all his time and practice in 8 hours a day, tinkering with it and trying to figure it out, he'd be like, the difference is the mechanic can't just get an unlimited amount of cars. He can't just say he wants to, instead of charging $100 to fix a car, now he wants to charge $10,000 to fix the car and expect the same amount of cars to come in. It's not how it works for the mechanic. But for us, I wanted to make $100 when I started. Now I feel a little better. Now I'm getting better at fixing that car. Now I want to charge $1,000 for every car that comes in the garage. Now I want to charge $5,000 that comes in the garage because I know I can fix it. I know every time a car comes through here, I'm confident taking it apart and putting it back together. It's the same, dude. You just scale it. Like that's our gift. That's the beauty of this line of work. It's this is an unlimited scale. So when you stop thinking about it as I need to make this money now, and start thinking about it as like I need to get really good at this, and stop losing and start winning and being confident. The money will come, dude. Yeah, it will come.
And that's where I am now. I want to get really good at it. You know what I mean?
Think about it this way, Shep, dude. You have a job right now, bro. This is play money. This doesn't matter. It doesn't mean shit to you, frankly. You have a job. Like, at the end of the month, your bills are going to be paid. So like,
well, let me start. That's what's unique about my job. I'm working commission right now.
Yeah.
So here's the thing. When I get paid, I get paid. Like I'm killing elephants. I can eat for a while. But this for me is number one, reoccurring revenue that I can generate while doing my job until I can take a $40,000 commission that I get, dump it into my TD Ameritrade account, and immediately increase my R's and scale what I'm making and just multiply what I'm making and have reoccurring revenue that I can depend on. Does that make sense?
Okay, dude, it makes 100% sense. So I'm going to be honest with you, like straight up, if what you want is cash flow, day trading might not be the best method to do that. It might not be. Like there's a lot of risk. It requires a lot of specialty. It might not be the best avenue, frankly. Like it just may not be.
Well, so let me temper that too. I want to be a trader. And I heard someone say day trading was the hardest way to do it. And so that's why I'm attracted to day trading, because I enjoy it. Number one,
I love that, dude. I love that.
If this is the hardest to do and I can get good at this, then I can do other things as well. And my job allows me to do this. I can do both. I
totally agree with you.
You know what I mean?
agree with you. Yeah. No. Okay. So now with that being said, so let's address the other psychological component of this that I think you might be stuck with right now, that's kind of keeping you from seeing the value of that R. So it may be that your R is not big enough. Like you want more money. Like if you lose $300, it's not that big of a deal. And if you make $300, you're like, it's not really that big of a deal. So like, I want $1,000. Like, so I want 3 R's because I really want $1,000. But dude, if you want $1,000, make $1,000 R. Then that R will mean a lot more to you. Like you won't feel the pressure to make 3 R's because you'll know I can make in 1 R. Like you understand what I mean? Do you see how that psychology changes things?
Yeah. And some of that, I do have some of that. We're like, all right, I'm going to just try this right here. And it's stupid and it's a bad trade. You know what I mean? But maybe because
you don't care about losing $300.
It's just,
but if it was $1,500, you wouldn't take that trade.
And I've got I'm up a little bit too. And I tend to have that. That's always kind of been my personality. If I'm up a little bit, I'll be a little bit more, willing to spend more or do more, as opposed to always being disciplined enough to stick to the plan regardless,
That's human nature, dude. If we have abundance, then we're going to we take inventory of that. Like you have to actively try to not do that. But if you don't, then it's the default. So
that's right.
But what I will say is, dude, there's that's fine. You can do that, but you do it smart. So the difference
Yeah.
is you do everything exactly the same. You take the same trades. You do everything the same. The difference is now, okay, maybe I'll hold for 2R and I'll trail my stop to break even. Instead of I'm taking this money while I have it. Maybe you'll hold a little longer. The trade's the same. You take the same quality trade. You just give it. So like, okay, so say if I'm say I'm taking this trade long, right? Just pretend for your imagination how we talked about before, and it starts consolidating here. So if I'm up for the month, if I'm let me rephrase. If I'm down for the month, maybe I don't. If this fails, I want to lock in my gains.
Yeah.
Okay. But if I'm up for the month,
Play it out.
if I'm up for the month, I know that if this consolidates here, it's going to do one of two things. It's going to go like this. It's going to go like this. So if I'm up for the month, maybe I just leave this thing open and see what happens.
Mm-hmm. Mm-hmm.
And instead of, okay, I don't know if it's going to go down or up. I want the money right now, though. I don't want to lose a cent. I want to give it a little bit of room. Like, so the difference is like, I don't even want to lose the money in between me giving it enough room to work. Like I want this much money and I want it right now. That's what I do early in the month. If it's not doing exactly what I wanted and it's like kind of taking a little pause, I don't wait for it to trail me out. I take that shit off the table.
Well,
I want that full money.
And so that's one of the things that I've noticed that, you know, I want to win. I want to win. I don't care if it's $5 or $500 or $300. So every time I do it, I'm doing it to win. And if it hits a resistance, and I've lost some money like this, but I've saved some money. Like if I call it a 3PR, a 3-point resistance, I'm usually lowering my target to that resistance level and selling at that resistance level to lock in a gain.
So what if instead of, first of all, cool. Second of all, what if we just set up every trade so that 3PR was our full R or our 2R or whatever it is? But no, like that, and not like, so if say this is our 3PR right here, here's my target right here. I want to front run this thing. So I lock in my money. I want to set my trade up. And if I can't set it up, if I can't get what I want right here, because my stop isn't protected enough or the entry doesn't make sense because I can't protect my stop well enough, I don't take the trade. I wait for a trade where this works, where this exact ratio that's going to give me exactly what I want. I wait until I see that. Period.
So you're saying basic, and I know we use support and resistance, but I've never, I guess, thought about setting up, because all right, so let's say like in this situation here, I'd set my target initially at 1R, okay? And then let's say the price here, you know, it did this, and then it came here, and then it came here, and then it, you know, boom and boom and boom. Well, right about now is when I'm saying, all right, look, there's that resistance level right in here. So I'm taking my target now and boom, I'm moving it down to there. So now once it hits that again, I'm out. You see what I'm saying?
I think this is why you're losing more than you're winning in terms of dollar amount.
Yes.
I think this is why, because you're moving your target up. So you're taking money off the table. What if you just set it up? If this is what I'm saying, if this is a resistance level here and you knew that before you set the trade up, then if you can't get as much as you want in this move, if you know it's going to stop here and you can't get what you want because you can't put your stop in a place where it's protected, then you don't take it. Point blank, end of story. You don't take the trade. So now, what I'm saying about holding trades later in the month is I'm saying you take the trade. Here's your R. You're there. This is all you wanted to get to. But it's late in the month. You're up some R's, and if it gets through here, it's going to keep going. Instead of taking that R off the table right now, you just let it work, and you risk being stopped out somewhere up here for break even. But you just keep letting it work. Instead of early in the month, okay, it hit my target. It hit the target. It hit where I wanted it to go. I'm taking it. Period. End of story. I drew this line. It got there. I'm taking all the money right now. That's how I want you to set up your targets. Make it a legit target. I want price to hit here. If it does, it did what I asked, I'm out of the trade, period.
Yeah.
Except for when later in the month or when you're up, you're okay. Okay, it hit my target. I set my target up at a resistance. Now I actually front run the resistance a little bit, and I want to make sure. But so now it hits the resistance and starts to consolidate. I'm leaving it on. I'm not taking the R. I'm going to see. I might not make any money, but if it goes through, I might make a little bit more. That's the difference.
Mm-hmm.
But if it hits your target, take it. That's your target for a reason.
Yeah. Yeah. And so, like, let me show you this. So, like with this trade right here. All right. Well, I knew when I set it up at 9:06 that, all right, it's popped 900. And I didn't know, but I'm guessing, all right, 910 is going to be a resistance. But
Did you hear what you just said?
Yeah,
I'm guessing. I don't know.
I was guessing. Yeah,
Bro,
that's right.
You have a whole chart to look at. You don't need to guess. It'll tell you where it's going to go.
Yeah.
But in this particular case, you don't have any idea where it's going to go. So you have two options. You have two options. You either don't take it because you have no idea, or you say, well, I'm going to protect my stop. Here's where I want to get in, and I'll just let it ride. And then wherever I make enough money that I'm like, cool, I like this, then take it off. But don't base, I mean, the entry and the stop, if you don't know where it's going to go, if the sky is the limit, you have no idea, just make sure your stop's protected and then get in on a place that's the good entry point.
And so,
and then just
like
let it ride.
Here, so right here, I didn't, because it had already broken through 900, which was the all-time high. So it very easily could have pushed 905, 910, 915. But if you look at what I did, I see on this trade, I did not protect my stop because there was no sort of, I should have put my stop back below here because there's nothing, there's no resistance, there's no support, there's no EMA breaking my stop with where this trade was placed right here. So number one, I probably shouldn't have taken the trade, but if I did, I could have gotten in above the bear, but moved my stop below the 618 here, below $900. So I've got some levels of resistance and then see if it's going to break through and maybe run a little bit higher than 905, 910.
Well, there's also a fatal flaw that you have going with this strategy right now. Okay, so what your interpretation is any old bear candle that closes above the 10, I get in above that. So what, and I heard you say earlier, well, am I getting in like too late? Are there candles before this one I could have got in?
Yep.
If the answer to that question is yes, like let's say this was the first one, which it looks like it might have been, and you missed that one, you're done. It's over. You can't get in up here. This was your entry. You missed it. Wait for another trade.
Gotcha.
Because now, yeah, this was the entry. This per that strategy. I don't know that I would take this particular trade, but if we're only looking at the rules of the strategy, this was the entry. Not up here, not here, this.
So
now it also happens to be in a pennant pattern and it's also at resistance. So yeah, if it breaks up, that's going to be the move, which is also something you need to keep in mind. I mean, it doesn't necessarily, the more confluence, the better. But for the simplicity's sake, let's say this was the first bear candle and you have this pennant pattern and you're pushing all-time highs with nothing ahead of you. This is definitely the candle.
Yeah.
This is definitely it.
Yeah. Yeah.
So, yeah, I mean, point blank, like the strategy, that is one thing right away that will like make you be more selective.
Mm-hmm. And so like with that strategy, and I know you in the past you've said you don't particularly use it, but so if you miss one, you know, what I've been doing, and I didn't do it here obviously, but all right, now I'll wait until it either gets to the bottom of an S curve or it dips below the 10, then comes back above, that kind of resets, you know, and then I'll look to get back in, or I'll go short sometimes if it's below the 10, you know, with the bull candle. So,
and those are your rules to make based on, this is where you get those rules though. So you do the same thing. So if you say, okay, I get in on it. So I missed the first candle. So a column for your spreadsheet could be like, was it first candle? That's simple. That's a column in your spreadsheet. And you know what that means. That means like this. Was it the first candle? If yes, put a check mark. If no, I don't know. Or if yes, put a 1. If no, put a 0, something like that. Or just leave it blank. And then what you can do is you see, if I don't get in on the first candle, then where else could I get in? On an S curve. So I get on the S curve and you start to track that data. Okay, so I didn't get on the first candle, so that's a 0. And then on this candle, S curve at support, at previous resistance, new support. And if this is a 0 and that's a 1, then now you can start to track how often is this working? Like, is this serving me? Or am I just arbitrarily, like, this is how, if you're using a strategy, especially a strategy that's based on something like this, like, you have to make rules like this that are going to tell you, like, okay, per the rules that I learned, I cannot get in above this candle. Am I missing opportunity? If I think I'm missing opportunity, okay, I'll allow myself to get in above this candle. But okay, is it the second candle? Is it the third candle? Like, when am I getting in? And how is that affecting my win rate? Like, if I take 100 trades and 100 trades of each, if I take 100 trades only getting in above the first candle, if I take 100 trades only getting in above the second candle, and 100 trades only getting in above the third candle, and on the first strategy I win 60, the second strategy I win 30, the third strategy I win 20, these two are dead to me. I'm never doing that again. I'm only taking the one that works.
And see, that's I've been a bit, not necessarily arbitrary, because I'm keeping in mind support and resistance, but I haven't been documenting, all right, was this the first one of the day? I try to, maybe I should, at first I was like, maybe I should wait 15, 20 minutes before making a trade.
Now, when I say first one of the day, I don't mean, I just want to make sure that what I meant was the first red candle above the 10.
Yeah, no, I'm talking about that.
Else? Okay.
No, I'm talking about that. Yes. So.
Oh, you are talking about this.
Yeah. So like sometimes.
Okay. So I don't care when this candle was, by the way. This could be at 2:30 in the afternoon. It doesn't matter. I'm talking about the first red candle. You understand what I'm saying?
Yes.
Okay.
And so maybe I think initially I was passing up some of those red candles above the 10 because it might have happened within the first 10 minutes of opening. You see what I'm saying?
100%. Yeah.
And so I've got to go back and back trade
exactly.
Opening, to
so
get a better
so what you do is you make a separate tab on that spreadsheet. The second tab on that, or the other tab on that spreadsheet, you can label something like OR. And on this tab of the spreadsheet, I'm doing the same. So I'm doing the same thing. I'm taking the first candle above the red, but in this strategy, I'm allowing it, like, if it's the very first candle of the day, screw it. That's why you're back testing. You're not putting any money on it because you don't know if it's going to work. You're back testing it to see if you should put money on it. So and then the same thing. So you can have the first column is I only take the first candle of red, and I do not take opening range. So first red, no opening range. Second can be first red, opening range, and then second candle, no opening range. And you see, you have to keep it all separate so that you see what works. So anytime you add or remove a variable, you need to isolate that set of data. Makes sense?
No, that's perfect, man. That makes perfect.
And then you start to see what works. Then you start to see what works. And you can, so you get those out of the way. Wait, are we still on here? Why am I seeing my screen?
I stopped sharing. I got back to
okay. I see, I'm back. All right. So so that's the type of thing that you create your own back trading data around. Those are the things that you're interested in, and then you create your rules from that. So like I said, if you're only winning 30% of the time when you take the third red candle, don't do that. That's a rule. You will only take the first. Or let's say in some weird world, the second candle works best. Whatever it is, you get your rules by seeing what works and what doesn't work, and only doing the things that work and not doing the things that don't.
Yep. No, that's good. Yeah, absolutely, man. I need to document a little bit tighter on that. And and I got to run.
Because if you
now.
don't, dude, you're just like, oh, well, sometimes I do this, sometimes I do that.
And right now,
it's going to kill you.
Yeah,
it's going
I'm
to kill
kind of
you.
arbitrary sometimes. So I love the fact of the stops, because that was one of my things. All right, stops, where to place them. That was exactly what I wrote down here.
Now, dude,
this
this comes in layers. Okay, so
Yep.
the foundational rules are: I am only going to take trades, regardless of how many goddamn count. I will only take trades in which my stop is protected by whatever you want to call it. Like, you can come up with your own little rules, whatever it is. For me, this is good enough. Like, on this, like, if I can protect it here, and I have these moving averages, and the trend is down,
Yep.
and I can, and because the trend itself is protecting my stop, because the trend's down,
That's
so why would
right.
the price go up?
Yep.
The both moving averages, both short-term moving averages are protecting my stop.
Yep.
This level of support is protecting my stop, or resistance. This stuff is, I mean, it's not very strong. I wouldn't even really count that. I would pretty much only count this. I would count these. I'd count the trend. And if my stop's here, for me, that's good enough, because now I know I can get out, break even if it bounces here. I won't necessarily lose a full R, unless it just rampages. And I mean, that happens sometimes, but it's weird. It's uncommon for that to happen. Most of the time, it's going to bounce. So I can get out, break even, or lose less than an R. My stop is protected. So I will only take trades in which my stop is protected. First rule, cardinal rule. However you define protected is how you define it. How I define it is, like in a trade like this, a continuation. I want the trend on my side. I want both moving averages on my side. I want one level of resistance on my side. I want all of that stuff protecting my stop. Second rule, I will only take trades that my stop is protected, and I have at least 1 R worth of room to my next level of resistance. So I'm just drawing a random arbitrary line. I don't know if there's resistance here. I have no idea.
Actually, ironically, it's based on this. It's right at 1 R. This setup would be right at 1 R.
That's perfect. So you can take this then. Per your rules, this is the break of the first bull candle. Your stop is protected. Your stop doesn't even need to be all the way up there. Your stop could be right here.
Yeah.
It's even safer up here, but that's for you to decide. So say you have plenty of room to 1 R with your stop there, and you're cool. I just want 1 R. Then cool. I would say front run your resistance a little bit to make sure you get that R, and leave your stop right where it is. And now say it's a little bit tighter. Say that 1 R is like down here somewhere, a full R. So now maybe I can just, I'll just move my stop down just a little. It's still protected. Still plenty of protection. I don't have this moving average, and I don't have this cushion after the moving average. It's a little tighter, but now I have a full R. I have 1.3.
Yep.
So as long as your stop's protected, you can give it as much or as little cushion as you want, but at a bare minimum, it needs to be protected.
Well, and you can see what's happening here with this trade. So like, this is where I'm saying in the past, what I've done is, if I'd have seen this, and this, I probably would have moved my target to this level right here. You see what I'm saying? So you're saying,
that's
hey,
cool.
If your stop's protected, let it play out.
No, that's not what I'm saying. That is not what I'm saying. This is not what I'm saying at all. What I'm saying is, this trade isn't moving how you wanted it to.
Yeah.
Right.
So get out profitable.
So don't lose money.
Yeah.
That's it. That's the rule. Yeah. It's not working how you wanted it to. Yep. So don't lose money.
Gotcha.
If you can make money, cool. But it's not working how you wanted it to. Your goal is no longer to make money. It's not working how you wanted it to. Now your goal is don't lose money. If you can get out, so then it becomes, okay, well, if I'm all the way down here and it starts not moving the way I want it to, then maybe I just want to take the profits right now, because I'm at 0.5 and it's not working how I want to. I'm just going to take that. That's good. Gotcha. I made whatever, I'm $150 and I didn't lose any money. And if it goes on for, cool, but it's not moving the way I wanted it to, and I can still get out and make money and not lose money and not break even. I can still make money, and that's good enough for me. Take it.
Yeah.
Then take it.
That's kind of what without being that sophisticated, just kind of just All right, got it. You know, no, I couldn't articulate why, but all right, resistance, resistance, resistance. It ain't moving. I'm getting out at the next time it hits this level right now. You know, that's
Yeah.
kind of what I've been thinking and how I've been playing up until Thursday and Friday of this
And
past.
dude, that's cool. But okay, and then we get into some of the intricate candle stuff. So like right now I see a hammer with big volume. Like if that thing gets taken out, it's gonna keep going. But that now, I mean, that candle didn't exist when we first took the trade, right?
That's
Or
right.
did it? Where are we?
No, it did
Okay, so
not.
that-
We started
so the-
right here.
Uh-huh. So dude, so you're in bearish and you see this candle come in.
Yeah.
So when you're in the trade and the candle's forming, you're like, fuck yeah, this is it. Nice. It's falling. I'm gonna make all the money in the world. It's on its way. And then when it gets bought up like that, it changes things, especially when it gets bought up with volume like that.
Yeah.
Because now everybody that was like, yes, it's breaking out of this consolidation, it's gonna go lower. They're all shorting. They're all getting in. You're already in. They're just getting in. So when they're all trapped, you're not yet losing money. They're all losing money. You're still at break even because you got in
That's
somewhere
right.
up here.
Yep.
So you still have a chance. So these people are either going to stay in and try to short it again, which it looks like they did. And if they get through this level of all these buyers that came up, then it's going to keep going. But if it doesn't, then it's going to go higher because now they tried twice and it didn't work.
Yep.
So it's going to go higher. So that's like getting into the next level of trade management where you see candles starting to come in with volume and you're like, okay, that's not what I wanted. So dude, for me, honestly, if I'm in short, now technically you still have a little wiggle room. You'd still be a little bit profitable on this because you got in all the way up here. I know you drew the line here, but really you got in here.
Yep.
So right now I see that candle when I'm in short, especially on a slow moving strategy like this, the 10 EMA, where it's just a grinder, it just takes forever. If I see this hammer come in, bro, I'm out. I'm taking that money and I'm out. Maybe I get in later. Maybe it comes back up here and I get another chance. But I see that, dude, I'm out. I'm not risking a dime on that because it's why would I? Because if this gets taken out with strength, they're ripping, bro. Because these people are all trapped.
Yep.
So if I see that, yeah, it could go lower, cool, but it's not worth it. I'd rather not lose money. That to me is a pretty strong bullish sign, and I'm out. And look what happens. It doesn't shoot up immediately because you got lucky. That could very well shoot up immediately.
Yep. Let's see what happens here. It just grinds and chops and
now it reclaims this midterm average. So right away, I'm not looking short anymore. I'm not looking long, but I'm not looking short.
And
right now, what I see is this is indecision. It's trying to base. It's trying to go the other direction. So until it figures out what it's going to do, I'm not doing anything, especially with this strategy, because this strategy is what makes it work is its momentum. You're going with the flow.
I'd have been out
with the flow.
Following what I've kind of developed. I'd have been out after I'd have probably been out after this hammer right here, this bullish hammer. I might have stayed in here on the bull or on the bearish candle with some volume, but then I'd have been out probably right there.
Why?
Because it's lost. I mean, like you said.
So go back to the back trading thing. Get all this stuff out of here. Just click back to this candle so we can get rid of all that stuff. You just go. Sorry, I got all the shit in my way. Click. You grab this, and then you just go to. You click on this candle. Nope, too far. Yep, right there.
Okay.
Okay, now click next because we got to see that hammer. Okay, no, okay, so go ahead. Okay, click next. Okay, so why are you out? You see this candle come in. What do you think?
This is a level of resistance because
support.
Well, I'm sorry.
Sense,
yeah.
But you're right. Think about my trade. You're right. Yeah. It's arbitrary. It's tomato,
right.
tomato.
Tomato, tomato.
In your direction, that's resistance.
I'm shorting it, and it ain't going shorter. So
yeah, exactly.
So I'm getting out right here, right now, because number one, if I'd have seen this, my first thought is going to be, oh crap, that's a bear trap. I'm screwed. Then I see these little indecision. Okay, this candle right here, people are trying to short it again. That's bearish. It's not a ton of volume, but it's a strong Maribozu candle. All right. but
Big
it
red
didn't
one.
go shorter than right here. And then I see this. Okay, I'm out because that's the third or fourth time it's tried to break this level right here to go shorter, and it hasn't. So
How do you get that's the third or fourth? Isn't that
I'm sorry.
okay?
I'm
So
sorry.
you're
I
saying
meant right
this
here.
one.
Yeah. This.
So this is the okay.
Yeah. Yeah. I'd have stayed in past this. I'd have stayed in past this. Okay. I like that. But after it did this, I'd have been out because that's 1, 2, 3, 4 shots at this price level right here that it hasn't been able to break through. I'd have cut my out of one small and gotten out right there.
But wait a sec. Okay, so first and foremost, you should already be out. Let's get that out of the table. You
Yes.
should never, ever, ever. If you see
I've
this
gone-
candle come in and you're short and you're already profitable or break even, get out.
Yeah.
Just
Yeah.
leave. Just leave the trade.
Yeah.
Just get out. It's not worth it. Because 9 times out of 10, if you get a hammer with volume like that, it's not going lower, at least anytime soon. So
Yeah.
just get out and try
Get
to
out.
get back in later.
Right.
Now let's say you, for whatever reason, you're still in, which you just shouldn't be. You just should
Right.
not still be in. But
Right.
let's say you are. Now this level, if it breaks, at a bare minimum, you've held this long, and you can still not lose money. And if it gets through that, then it's gonna go lower. So why not just wait and see if it breaks?
Because here's my thinking would be I'm more concerned now that it's going to do that.
Yeah, but you try your stop. I'm sorry if I didn't say that out loud, but when I drew this line, that's what I meant.
Oh, I got you. I got you.
No, don't move that. Leave that right where it is.
Okay.
Because that's going to throw the math off. Leave that alone. Just put a line here, draw a line. And in your mind, and then in your broker, you can go and type in take this trade off, cancel that trade, and put a new stop
That's
right here.
interesting. I've never.
I do mine mentally, but yeah,
I
would not recommend doing it mentally.
Like, and I've started doing that more and more, and it's helped where I just put my stop now like a penny above or something. But you're saying it's better to trail the target as opposed to just move to a stop market order altogether. Is that what you would do?
Not sure what you mean.
All right. So
you mean instead of marketing out, like hitting a button and immediately getting out? Is that what you're saying?
So rather than a trail stop, I've just canceled this stop.
Trail stops are based on like arbitrary percentages or dollar amounts. So if the price goes lower and then makes a quick move back up, you might get trailed out even though you're still fine. So yeah, don't use a trail stop.
No,
get comfortable. So you put a stop order in.
Yeah.
Make sure it's a stop, because if you put in a limit, it sucks. You're going to buy at the time you don't want to. So a stop order, and then when price. So yeah, exactly. Do you use Thinkorswim?
I do. Yeah. Well,
so you can just drag the line, right? You like doing that? You just drag the line.
I haven't gotten real good on the. I've been using the Thinkorswim web-based platform.
Get the desktop. It's a totally
different. I haven't. I've just got to get more comfortable with that order type look. I've got to get that worked out.
It's so much better, dude. Like it's so much better. And not only that, but I'll show you how to use Active Trader. So much better.
Yeah, and so that's what I've been doing. Like in this situation, like I used to just sell, but just to be profitable. But now what I've been doing, like I've been moving my stops up so I don't lose money. But then still, if it keeps hitting that line, I'll go ahead and just sell and win, 0.3 or 0.4 as opposed to breaking even. Just trying.
And that's what we talked about. Yeah, that's what we talked about.
Yeah.
But yeah, I mean, that's exactly what we talked about. Playing it however you want to. But yeah, and like I said, I would if after that hammer, I'm out.
Yeah.
But I think what you're saying is like, say this hammer isn't here and it's just kind of creeping like this.
Yeah.
And so in this scenario, without that hammer, I see nothing that says get out necessarily. I mean, you got some volume coming in here, you got some volume coming in here, but per strategy, it's going to be hard to it's going to be hard to, unless your strategy, like you once you get to a point being comfortable in analyzing volume like this, and you see it in your back trading enough that like, okay, a volume bar of this size on this ticker means I should probably start to think about getting out. because I have stayed in and usually it reverses, but like stay in and see if it reverses when you're back trading, not in real life.
Right.
But like, so like I said, you back trade to see what works and what doesn't. So like if you're back trading and this hammer is not here, like just pretend it's not here and this level of volume comes in, just keep holding. And then if it breaks through, then now I have a mental note. Okay, volume of this size in this area, in this context is telling me maybe I need to think about taking profit. Or volume of this size doesn't mean shit and it's fine. It just always keeps working. You know, you only get that experience through looking at charts. Like I can't tell you I can't tell you. The only way that you learn that is through experience. And that comes from back trading. And dude, another thing I heard you say was, well, I'm not comfortable enough using that. So I'm still just taking trade. Like I know I should probably get on it, but like I'm still, dude, if you're not ready, like these are the things that you need to get good at before you're taking live trades. If you know this is the next level, then hit pause for a second on live trading, get good at this other stuff, and then come back to live trading even better. Instead of, oh, well, you know, make time for it or whatever. Like, think about it like this it's an investment. So instead of like trying to do two things at once, for the betterment of my trading as a whole, I'm going to get better at this thing that's going to make me a better trader and it's going to be better in the long run. Because I got proficient at this now. Like take the next step, feel comfortable taking the next level. And sometimes that means putting a pause saying, okay, I've had some success in the live markets. I want to get better. How do I get to the next level? That's going to require me to all the time I would spend trading. Now all that time I would spend trading, I'm spending getting better, practicing, doing these things that are going to take my live trading to the next level. It's one big thing. It's not like live trading and back trading. It's like, it's all one thing. So if you need to take a second to get better as a whole, then the whole thing gets better. You know, that's how it works.
And I do. That's kind of where I am right now. I need to kind of just go back and look at some charts and kind of fine tune, which is why I wanted to get with you, man. And it's been extremely helpful. So I appreciate your time. I got to run. I'm getting called at downstairs.
All right,
dude,
man. Well, just know that we're just scratching the surface of this. We should meet again because I don't feel comfortable. Like, go practice it and everything. But like, we haven't even really got into the support. But just this. So just this should be enough to really give you a lot to chew on for at least a week or so or whatever. Yeah. So chew on this stuff. Okay. And I want you to go practice it
together. I'd like to carve out time, man, you know, weekly, once every 2 weeks, week and a half, whatever your schedule permits. You just let me know, man. And
yeah, dude.
Is there any
you hit me up and then because I'm kind of fluid. I don't have a whole lot set. I'm pretty fluid. I mean, I make plans for like the day generally, but like I don't necessarily have a whole lot of things. Like I usually set like a week out or so is about as far as I go. So yeah, just let me know what's gonna work for you. You have a full-time job and a family. I trade, you know, like.
Well, and I'm trying to get to where my full-time job is trading.
You'll get there. You're well on your way.
I'm M&A. I love M&A because you can make a lot of money in M&A, but it provides you with.
That's not the same thing as loving M&A, dude. You love the money that M&A gives you. It's not the same thing, dude. Like if would you do it for free? Then you don't love it.
No, you can't make any money doing it for free. You got to get deals done.
Dude, there's other stuff but that's another part of becoming a great trader. Think about the shit that you would do if you had all the money in the world. Because that is if money doesn't matter anymore and you have $1 million billion, what the hell are you going to do all day? I love trading.
I love trading, man. I've really grown fond of trading. Dude.
Then then not only is it the best way to make money, but you also love it. That's where I am. That's what's going to make you super successful because you're willing to do the work because you love it.
That's right. It's very, I don't know, man. I'm a former athlete, former coach. There's something about playing the market. Like when the bell rings, it's like game fucking on, man. Let's go.
Dude.
go.
And dude, you know that
it's
it's the
just-
same way that you're in the gym squatting and you're running and you're going
Yeah.
to practice and
Someone's
the whole
trying to-
time
Yep.
it hurts, but you're
Yep.
like, I love it because I'm gonna
Yep.
get better. It's the same thing, dude.
There's someone on the other end trying to cut you and you're trying to cut them, man. I mean, it's there's a little competitive juice that starts flowing. But no, anyway, man, this has been beneficial. It's been very helpful. And can you send me a copy of the video?
I'm probably gonna put it on YouTube just because it's way easier to share the link like that.
Perfect.
Because if I were, it's gonna take me 5 hours to get this on my computer. Like that's how long it takes to download. It
What's
takes
your
forever.
YouTube? So you have a YouTube channel. What is it?
Dude, I literally I just made it. Like, well, I mean, I've had the channel for a while, but the first video I put on was yesterday, so it's not like a big thing or anything like that. But I'm working with RLT to become like a coach right now, so like that's why I'm recording these and like keeping a catalog. Yeah, thanks, dude.
Yes.
So
yes,
I don't even know what the channel name is or anything like that. I'll just send you the link to the video, and then once you see that, then you can subscribe or whatever.
Yep, I'll do that. Perfect, Lance. I appreciate it, brother. One of these days, I'm gonna come to where you are and buy you a beer or something, man. So
I don't drink, dude. I'm sober, but thanks for the offer.
I don't drink either, so we can do other stuff.
Yeah, dude. I'll take crab legs. That'll work. Yeah, dude. I love
I appreciate it, buddy.
All right, man. Good to see you, Chef.
Man.
Hey.
Good to see you. We'll talk soon.
Yep.
All right, bro.